So, look, thanks everyone for jumping in. We've got nearly 30 participants, which is awesome, and I'm really looking forward to this. I think it doesn't matter, who you talk to from a trading perspective, how much experience they've had, how long they've been trading, how little they've been trading. You can always pick something up. So, I'm as excited about doing this. Hopefully we do it once a month and pick someone different every month that is completely different to the last one, and I think we'll all pick up something from it. So thanks for being the guinea pig.
Yeah, no worries, mate.
Being first one to go. So you mentioned in your bio you were working full time as a civil engineer, and then you were trading part time, and it sort of grew from there. So tell us a little bit about that journey, about from working full time and how you traded to that transition to.
So I got involved actually through a mate who's his dad's a stock advisor. He runs his own, and he kind of gave us a few tips here and there, and that kind of sparked my interest early, I guess, in university. And it was always kind of my intention that I wanted to pursue it, but maybe I was probably too far into an engineering degree to divert. So I kept on doing engineering, with the intention that maybe in the future I'll have more of an opportunity to go further in finance if I get the opportunity elsewhere. But I started when I finished. I started with a construction firm that you might know them, Hutchinson Builders. Yeah. So I worked with them down here when they first started an office, just doing site engineering, and unbeknownst to them, I guess. Well, not really, but sort of. I was trading just that open session, maybe like 20, 30 minutes, and then that 10 to 10:30 session, just trying to get an idea. I had 3 screens on my work desk. So one of them was just trading Iris Viewpoint. So I was just getting an idea of just tape movement, just getting an idea of like how stuff, interacted, charts. I would do a little bit of charting here and there, but more so just familiarizing myself with just stocks in play, I guess, that kind of idea. I was reading Mike Ballifiore's books at the time, so I was kind of going down that intraday path, or at least stocks in play concept. So I was doing that for a little bit, but not really taking it seriously. And then in about February 2019, I was like, I'll take it a little bit more seriously. I'll start, documenting each trade, taking more time to actually understand, the structure of a trade, and take a little bit more time and try to get a bit more involved in what I was doing rather than just watching. So I started documenting from there on in, and that probably for the first 6 to 8 months, it was pretty much just a downhill slope, just grinding away, but not really. I hadn't obviously had no edge, but like just no real idea of what setups I was taking. Kind of just when there was news and there was money moving around, I was kind of just getting involved in a really small way, but not really having any understanding of what I was doing in terms of if I wasn't taking setups, I wasn't thinking about it in that sense. But so I did that for about 6 to 7 months before I started to bottom out, I guess, at the end of my equity curve, and then try to just really like zoom in on any winning trades and try to just selectively just take them if I can, just understand why they were winners, and then kind of went from there. So that was in about what year it is now. So 2019, but at the end of there, I was starting to really find a passion for it. And then my equity curve started turning up, and I was understanding, what were my successful trades. I'm building some sort of style, I guess, what you'd call, trades that suited my understanding and my personality. And then it got to about the start of the year of this year, and I was pretty keen on going full time, but it was a really good job, and I didn't really want to leave. So I was kind of in that two minds of going full time and leaving a good paying job that I was still in a decent amount of debt due to HECS debt from my university degree. So I was like, oh, is this the right move to make? But they kind of made that for me because I was made redundant in March. We were building a supermarket, and we had just pretty much we had about a $100 million scope, pretty much just taken away overnight. The investors pulled out, the Singaporean investors, and they just said, no, it's just too much risk. We're done for now. We're just going to, finish this supermarket we were building. And that Geelong is quite a small construction industry. So when that hit, no one was really offering jobs, and I guess I had the chance to move to Melbourne or take the opportunity, take the redundancy, and then go full time from there.
Cool. And look, that leads me to a couple of the questions, and all these questions I'm asking you are basically come from members of the chat, which is really good. Some you're sort of answering along the way anyway, and I'll just throw a few in. But there were a couple of questions about that transition from part-time to full-time, which a lot of newer traders are going through there. Obviously, your decision was made for you. But when you were sort of going through that process, was your thought process about when you were ready to go full-time going to be about when you'd saved up enough cap to do it, or making enough money to cover living expenses, or were you looking for some sort of consistency? Did you have some sort of goalposts that you thought, if I can reach, then I'll do it?
Yeah, I guess there was no like financial limit where I'd say, okay, now I'm making $500 a week. Now I'm going to go full time. I think it was just I just had to show myself enough that I was heading in the right direction, that there was some, improvement in what I was doing, that I could potentially become successful, because I was so passionate about it. I loved it so much. I guess I would have done anything just to go full time. So as long as I showed some hint that I was getting better, or I was, making some improvements, I was pretty much willing to go full time and just take the punt, I guess, because I was in that mind where if I didn't do it then, or at any time really, that I'd regret it more than if I kind of put them two into perspective. And I was thinking, like, if I give this job up, will I be in a position where I just wish I never gave it back? And I think I realized that I'd be better off just, going full time. I can always go back to the construction industry. I just had to show myself that I was improving, showing some consistency. I don't think there was like any specific goal points I had to pass to go full time. So long as that I was, going to be able to cover bills, I guess. I kind of had a little bit of a piggy bank to get me through the first, 6 to 12 months. If I guess I was going to reassess then after that time, if I could continue doing what I was doing, or I was going to go ask them for my job back.
So when they made that call for you, and you're like, right, I'm going full time, do you reckon you had the conviction in your edge that you were going to make it, or were you shitting yourself?
No, I don't think I had the conviction there. I don't think I'd, like, it was showing that I was making money, but I don't think the conviction was there that I could continue doing that, successively month after month. I think there was promise there, and I felt like there was trades there. I was like, hey, I think I know what I'm doing here, but there was never that conviction behind my trade ideas. So I was never going to trade them with size or anything like that, because I was still not quite sure if it was just having a fluky month here or two, or if there was any real edge behind what I was doing. I guess it was just having some belief that if you work hard enough, that eventually it'll happen. And then, I don't think there was any real any edge there as such, but I guess I just believed in myself that I wanted it so bad that I'd make it work no matter what, kind of thing.
Yeah. When you started that full-time journey, what do you feel the biggest hurdles were? What were the things that you felt were holding you back, or the mistakes you were making? Was it stock selection or discipline or so on? And how did you get over that?
Yeah, I think it was just trying to be involved in every trade. Just whatever was in play, I was just trying to get involved for the sake of being involved. Like I didn't really take in consideration, like, is this a setup that I'm comfortable with, that I know what variables I need to be right to get involved. It was just, everyone's trading that stock, I should be in that stock, and I'm going to take a position either side of it, no matter where it is, whether or not I believe that it's a trade that makes sense to me or not. I just get involved because I thought, hey, it's really far down, it has to swing, but not really understanding, all the what variables that I need to make it my trade. So I kind of I think I fell into that trap of stocks in play, therefore I have to be in it, not really looking out for, if this trade is my kind of trade.
Yeah.
Another one is risk versus reward, or more selectively, just entry points. I think I guess it ties into that as well, but just focusing on entries was one thing that, just with experience being at screens, one thing I've focused a lot on, sometimes too much, but one thing that just really increased my P&L ratio, just so that I'd get involved just mid trade, and then I'd be questioning myself if I've got the right entry or not, and then it comes back a little bit and I'm hitting out. But I guess it comes into also like discipline to once you haven't got your ideal entry or a couple of pips within your ideal entry, then I just leave it now. I just go, well, I'll just wait around for another trade. I think that's why, as I've gone on, I take less trades these days. It's because I'm a little bit more selective in the trades I do take, because once I've missed that entry, sometimes I'll sit here for a whole day and I'll just, maybe because I'm being lazy and I'm not looking hard enough, but I just won't take trades because I'm not feeling, I'm confident on where I want to be in. If I'm not there, I don't want to be in the trade, or I just won't take it. I think that's one thing that's really helped improving that aspect that I used to struggle with when I started, that probably, it was detrimental to my trading.
You mentioned discipline, and I'll cover two questions here. One was about the discipline side of thing, and I'll read it word for word. How do you identify when you're getting complacent with your discipline, and what techniques do you use to get back on track? And the other part I'll add on is your results seem to show that you have very little drawdown. And is that what do you attribute that to? Is that a discipline thing, do you think? So
with that, I think a lot of it's when a lot of like the conviction trades I'll take these days, there's probably more conviction with it as it goes on. So at first I'm just taking a small entry, hoping that it's going to continue in my direction, but I'll just be taking a small starter point on the entry, and then as it shapes up, or when I take that first trade, the book responds how I'm expecting it to respond, and I'm thinking, hey, I'm right here, and then I'll add to that trade so that as my conviction increases in the trade, I'm getting bigger as the trade goes on. So I'm kind of like leveraging that trade as it continues to go in my favor. So I guess that helps with discipline as well, because whenever I enter into a trade where I'm too big early, I don't take the loss as quick as I can if I was small. So a lot of it's just taking that small entry, getting a feeler for it, making sure that everything looks right, or all the variables match up to what I thought it would do when I enter. And then if it doesn't, I'll just hit out for scratch and then wait till it makes sense again, or wait for the trade to present itself again. Or if I see, for instance, someone's keeping support where I thought there was support, there's a reload bidder, and then I'll maybe take a position again. But I kind of think that the discipline comes not from being super disciplined in all my trades, but I'm just keeping small entry points so that I can be wrong. Well, not wrong, but I'm usually hitting out for flat most of the time. So it probably looks like my win rate's higher at times, but it's usually just because I'm always just hitting out for scratch. There's a lot of scratch trades in there that don't get counted.
Yeah. So if you're hitting out early, it usually means, like, if you're being that tight with your exits, then there's obviously plenty of trades that go again and give you that signal again. And
yeah,
I always look at it, a stock's not telling you no, it's just telling you not now. So sometimes it's one of the hardest things to do is to take your loss and then go again. So is that something you find easy to do, to have a second crack at it?
Yeah, I definitely do. Like, there's been heaps of trades. There was even a couple today in that ASX where I'd hit out, and it's something I still struggle with, especially if I'm getting in higher than my exit, especially if it's a couple of percentage points. That is something that I'm working on, and it's something I like. Say for instance, PE, and the other day I hit out my full position at 9.5 that I'd ridden from like 7 or something, and it went back up to 10, and that was like the perfect point to when 10 just kept on getting rebid, and then it kept on going bid again, and it was doing heaps of volume, and I was like, I should be involved here, but I wasn't. So I think those opportunities, like, that's when you should be putting size back on, even though you just kind of have to accept the fact that you've probably taken off early. Or same goes against if you're on the backside of a trade as well, if that makes sense.
Yeah, definitely. What tell us about maybe one of your worst examples of lack of discipline. Have there been trades where you've just lost it?
Yeah.
And why? What do you reckon caused it?
So there was one particular trade when you say that. I think it was ABC on that Lime contract loss. I thought it was down too far, and a lot of that things comes from just having a preconceived idea of what's too far down. On I think this is 1 or 2 months into when I went full time, and I think it was down 10%, and it was a perfect short setup off the book. It was like those orders that rush in really late in there just before it opens, and you've got this whole stack of sells, and it was just a perfect, like, I recorded the tape as like one of these opening drive shorts. But then because I'd missed that trade, I just instantly went, I'll have to get long, because I missed that. I think it was like 6 or 7% off the opening price, and it happened within, the first 15, 20 minutes. And I'm all right, I have to get long now because I missed the short trade. So I have to make money off this stock somehow. So I was always looking for that swing, and, and because it was one of those in-play stocks, so I got big size on it. And when it didn't swing, it kind of tested VWAP from memory, and then came back down and was testing its lows, and then just went again. And like, just not cutting there because I had size on is one of the things that I struggle with. So it goes back to that idea of getting in small, and then adding to that trade once I know I'm right. Like, that trade could have been awesome if I'd just got into small size at the bottom, and then I would have cut when it retested those lows. But because I had so much size on, and I think it was already like a decent loss, like, $1,000 or something, I was like, no, I'm just giving more time. It'll be right. And that ended up being like a $10,000 loss. And that was like a couple months in, that was pretty much like at least like half a monthly's profit or something like that. So pretty significant. So I guess it comes into that idea of adding to your winners as they go in your favor, or as it confirms your bias for the trade. That trade particularly is what kind of focused me on that idea of adding to winners and cutting losers real quick. But a lot of it is not to do for me is just sizing. So sizing appropriately for the trade.
And realizing that opinions are bloody useless.
Yeah.
If they're not backed up by price action.
Oh man, I went and researched all the financials after I'd entered that trade, and I'm like, nah, they're wrong. I'm right. Made sure I went into all the fundamentals, trying to confirm my bias that this contract win wasn't as significant as marketed. And I actually ended up holding that trade, I think, for like 2 or 3 days, just because I just didn't want to be wrong. But one of those things where I think it went to like negative 35%. I think I lost about 35% once it was all done and dusted. So it was I was definitely the wrong one, was wrong, and it was far more significant than and that, like, when you watch the tape, if you didn't have any conceptual, if you didn't fundamentally try to believe in your bias, the tape said it all. It was just huge selling, and you're wrong, and you just have to accept
you're
it.
wrong. Yeah. That sizing up process then. So obviously, you've sized up over the years, the few years that you've been trading full time, and we've seen some of your results in the monthly reviews, and you're getting some really good results there. So how did you approach? So you discovered edge. You were comfortable that you had edge. How do you ideally approach the process of sizing up?
So for me, just sizing up, like I guess you size up across the board, just as you experience and you build your balance. But I'm only really like getting that uncomfortable sizing in maybe sometimes not even a trade a month, but like maybe like 1 or 2 a month at max. It's just when everything's right. And I guess when everything's right, it's every variable that I have that makes a conviction trade for me. So, right thematic or sector. So like, for instance, the weed one having blown up, because more of my understanding or my fundamental understanding is in mining, more so because I have technical interest in that kind of. So a lot of my conviction ideas, I need to have some sort of fundamental understanding of the company, understanding that, you know, the project's right, they've got the money, the management aren't as dodgy as, you know, some mining companies are, or just have some, I really can't get conviction in my ideas unless I have pretty much every box ticked, you know, that you know, the chart's setting up, there's volume there, you know, that just pretty much like all of the variables from what makes a conviction trade for me are there, and that doesn't really happen all that often. Recent one was that New World Resources, NWC, with copper, you know, like having like a commodities boom and having that fundamental backing where you've got a spot price making 7-year high, then you've got, you know, the chart shaping up, good volume. So, you know, you got protection if you do want to get big in the trade, and just making sure that I've got everything lined up and, yeah, the conviction there to get oversized. But until then, I'm not really sizing up into any trades beyond your standard sizing, especially like for intraday trades that are in place stocks. I'm still sized way further back from what a conviction trade would be for those, because I'm not as experienced, or I don't have the conviction in the idea intraday as I do for other trades. So, yeah, sizing's dependent on my conviction in the trade, but then also the setup and my confidence that I understand the setup.
And do your results back up what that best trade looks like? Do you have the, you know, you've got your logging and reviewing to back you up that this is what feels like, you know, right now in this market,
sure,
this is my best setup?
Yeah, definitely. And like there's probably been about 4 or 5 this year, and like, because I'll review those in depth just to see if there's any, like, just to see the commonalities between those kind of trades, just to see that, you know, identifying that setup early and then getting size. I think, you know, personally, I feel like it's probably, you know, a bit of like there's a certain amount of gut feeling to it that can't be put in words as well. But a lot of it is just looking at the commonalities between those trades and making sure that when you see the next one that you are taking, you know, that oversized risk when you think you're right, because I guess that oversized risk on those trades can far outweigh a lot of losses. So I'm trying to make sure that when those trades do come along, that I'm sizing appropriately, so that when I do take a lot of losses, you know, when in comparison, that they're minor. So you can get those, you know, decent, you can put up decent months, even though if you have lots of bad trades, as long as they're small, so you have one good one, you can outweigh them.
Yeah. And you mentioned a word there that I think is so important, and that's feel. And you know, I talk about feel all the time because you can't teach it. It only comes with time in front of the screen and time reviewing and time looking at tape. And I think it's one thing that newer traders struggle with, because, you know, a chart's a picture, but it doesn't tell the story, and that gut, and the gut can be way off sometimes, but certainly you need that experience, don't you, to start
Definitely.
to feel for it.
And I guess that comes with sizing up as well, mate. Like, I wouldn't have, without that conviction or that gut feel, I wouldn't be getting uncomfortable, because I don't think you can, I don't think you can safely, and while having good risk management, I don't think you can really size up into those without having that gut feel.
No.
And because
Yeah. So you take one of those big trades and it fails. Are you happy? Like, it's your bigger risk, bigger loss.
Yeah, I guess.
How do you handle it?
With those ones, because I'm still only getting into them small, I'm usually, because I'm taking like a base, like I'm buying on the base, or buying in a point where I have protection. When they do fail, you're going to take like even with a smaller entry. I haven't had any spectacularly fail on me yet, where I've had size on, I've been adding, and then for some reason, halfway into that trade, that there's a bad news, or one of those, you know, situations where, like, I'm assuming like one day it will happen. I'll be sized up into one of those conviction trades, and, you know, an unforeseen circumstances, you know, disaster at a mine or something like that probably could happen. I guess that's just a risk that you can't mitigate to a certain extent. If you want to push size on those conviction trades, you have to take on that risk. And I guess you just have to wear it if it goes. But I guess I just try to make sure that I do have solid risk management whilst I'm building into that trade, and that I'm willing to cut if I'm wrong instantly, even if that does mean taking a big loss. I guess this is part of the trade.
Yeah. Tape reading. It's a question that's asked often.
Yeah.
And every trader has a different answer. What's your take on it? How have you evolved as a tape reader? How do you
I think
practice tape reading? What is it? What's it mean to you? Because tape reading means something different to everyone. So
yeah, I'd probably say it's probably the one thing that has evolved the most whilst I've been full time. I think it's probably one of the most important things for me these days is tape. I don't really. I use charts to understand where the price is at relative, but it's not something that I rely on religiously. Like I don't really I look for patterns, but I'm also looking for order book, like the personality of the order book. I'm trying to get a feel for the order book, and I think having been around full time, just being full time, I guess, is an edge in that sense because you're watching, for most of the day, and your focus is there 100%. So you're picking up on all the smaller, things that you probably wouldn't see if you were jumping in and out throughout the day. So it's something that I don't think that you can get by, reading a book. I think it's just something that just takes a lot of, and I don't even think I knew that I was developing my tape reading. I didn't do anything specifically to develop it. I took a lot of time. One thing that helped me a lot was while I was trying to get an idea of, what am I looking for in the tape without having to read a book or anything. I'd try to find those stocks in play and then find key moments in the tape. Say, for instance, it's a pivot, like a buy the dip strategy, or you're trying to buy a breakout. I'd go back over the tape, and I have a screen recorder, and you can on Spark with the replays. I just use the screen recorder to record those key moments in the tape. 1 or 2, 3 minutes there, and then slow it down and record the screen, and you can make it into a GIF. And then so for each of the strategies or each of the setups, I'd categorize them and then store the tape from each of the setups in those categories. So say, for instance, buy the dip, I'd find the best buy the dip setup for the day, record that, and then put that in the folder. So you kind of build a library of key tape moments so that you can see the similarities between them as they come up more often. So you kind of, next time you do see that, say a buyer's protecting a level and you see it in real time, you can take that trade with a little bit more conviction because you've having seen that before in the tape, in those recordings. But that's something that helped me a lot in trying to understand tape reading. I might not have known exactly what was going on, but one of those feel-based things where if you watch it enough and you see it enough, you kind of just, you kind of believe in what you're seeing to take the trade.
And that's a great idea, putting them in baskets, because I've recorded plenty of tapes over the time and probably deleted them along the way.
Yeah.
Watched them a few times, then go, yeah, but that I've never ever categorized them into, right, this is a buy the tape, buy the dip tape, or this is a blow off top, or so that's a bloody great idea. So
I think it helps because there's obviously similarities between each of those situations, and you start to notice them a little bit more as you look over the tape. And like the CPH the other day on those exponential, it didn't really do the exponential blow off, but that first or the last pullback was so similar to every other blow off top you've seen. So I guess it's one of those things of memorizing the setup and knowing when the tape feels right or looks the same as one time you've seen it before.
Yeah, it's interesting you mentioned that because it is different the last couple of months with moves like that and BRN and even FMG today. Like the algos are there and they don't blow off with volume, and then that's the screaming top. I feel like bottoms still look a bit more like that sometimes.
Yeah, those volume climaxes, the bottom.
Yeah, but tops are different. So yeah, you definitely got to learn them. But this book covers probably a couple of questions, and unfortunately you haven't got your screen to share, but your process. So your key resources, websites, softwares, scans, your daily routine. What does that look like? And I'll wrap this into another question as far as advice for newer traders. Like, what do you think the bare minimum should look like if you're starting out as a trader?
Yep.
As far as your resources and your reporting, and what does it look like? What do you have now, and what's your process?
Yeah. Okay. So for the morning, just checking. So overnight lead in. So overnight markets, overseas markets, your Dows, your Nasdaqs, just seeing what generally went on across the night, if there's any extreme moves. And then commodities is probably one of the first things I check. A lot of the stocks I'm trading are commodity based, even though they don't always follow on the ASX, but just to see what like copper futures are doing or the gold price did overnight. Just try and get an idea of ETFs. So we'll look at commodity ETFs, tech ETFs. So the lit ETF's been a really good lead in for a lot of those like lithium stocks recently. So seeing what that did overnight, those similar names, Albemarle, I don't know if I pronounced that right, but just similar names in similar sectors to see how they performed overnight. Investing.com is kind of one that I get all that info on. It's pretty concise and it's well structured. So I go there first and have a few of those tabs up. I kind of just have a morning. I just press a tab and it all comes up. Then I just scroll between each of the tabs, just checking all those things. FinViz, AFR, just to see if they're usually pretty good at reporting for traders, breaking news overseas that might be relevant to our market. So just start to look at, what sectors might be affected from breaking news. After that, just looking at watch lists. So I've got so many watch lists, most of them useless, but I've got plenty of watch lists that just if I've seen stuff the day before that might be interesting. One of the first things I'll just look at the book in the morning and see if there's any interesting volume to note, any fresh bids or offers that are there early that spike interest. And I'll kind of filter it through my watch list. Anything that looks, not that it's not setting up or there's no fresh activity, I'll either remove it or put it in a different watch list that I won't have up throughout the day. So yeah, looking for those potential sector plays is kind of what I've focused on a fair bit recently with weed and uranium, all those fresh sectors. So just looking for any creating watch lists. I'm doing kind of throughout the day, so I'm not doing in the morning. So just really checking them in the morning. My Spark setup, I've just got. So on each tab is split in half. Got two stocks on each tab with my chart at the top and the depth at the bottom, and then just a bunch of tabs like that. I don't think it's the best way to set it up. I actually tried to do your setup, but I couldn't get them to all correlate. I just kept on, so I gave up. So I just got it set up with it's a really, really basic.
Or something.
Yeah, it's just chart and depth below. And then one chart I've just got smart lists and I watch lists on. I probably don't use the functionality of those smart lists very well, but they're pretty powerful, and I find that they're, at least for looking for those top rises or increased RVOLs, probably the one that I'm using a lot is those increased RVOLs for small caps and large caps, have them divided between the two. Other than that, just reading through the announcements as they come in, just noting any of the stocks. That's kind of how I build watch this as well. Just if there's any interesting announcements, especially for, resource stocks, if there's any drill hits that I think, are worth investigating, or any announcements that I think after market that might be worth having a look into, I'll create watch lists then as well. And then pretty much the last half an hour is filtering through those watch lists, seeing, the bids and offers pop into the book, and then filtering out, and then trying to, which I don't do very well, is just, focus on a few stocks rather than spreading myself thin. Something that I need to work on is just narrowing focus on those top in-play stocks in the morning. I struggle a little bit when I've got overnight plays, trying to manage overnight plays and then keep focus on the in-play stocks. So I need to refine that a little bit. But that's basically how I approach the morning.
do you tend to have a list of in-play stocks and then 3 minutes into the session, they're out the window looking at a whole list of other in-play stocks?
Pretty much. I see someone mention it and then I've forgotten about one of the stocks I had up. It's a bit of a minefield in the morning. But
and it's a trade. It's a trader's, problem day in, day out, isn't it? We can do all the research we can do, and then something comes up that changes everything in the last few minutes, and it's just the way it is. But I think the challenge for most traders is to work out how to decide where their focus is to be, and then be willing to change that or not change that, as the case may be. But it's always an issue. So let's say you've done all that morning research. Other than your bigger picture trades, because it sounds like 90% of your trades during the day, are they day trades or?
Yeah, I still struggle to categorize them because a lot of them turn into overnight trades. But I most of the trades that I'm doing throughout the day are mostly just order book scalps. So I'm not like a lot of the conviction trades kind of just do their own thing. And then throughout the day, I'm just looking just to create the cash flow trades, pretty much what I'd refer to almost, just quick scalps between levels, between ranges.
So you're scalping the spread or just like quick momentum drives or a bit of both?
Yeah, momentum drives, breakouts, that kind of thing. It depends on the stock and what it's doing for the day with those. Like for instance, those uranium stocks, I was pretty much just buying any of those stale offers ahead, just trying to find the next one to break out and then clip a few points off that, but wasn't really getting involved in any conviction trades other than pen. But so just a lot of it's just mostly breakouts, range breaks, and only scalping a few ticks here and there.
And then, so you've done your day. What about your reporting process, your reviewing process, and what would you recommend to anyone that's just starting the journey?
So when I first started, I'd religiously do every trade. I'd have like a variables checklist and then try to make sure that the trade, I kind of tick and flick and then write a paragraph for each trade. One thing, I think it's definitely worth like reviewing. I still review all of my bigger trades. I won't so much the order book scalps and stuff, unless I think there's value to be had. These days, I won't do those kind of trades as much. But I'll definitely, the bigger catalyst trades, the ones that I'm like sizing up in, I'll always review pretty thoroughly. But I'll always, like, at the end of the day, if I've missed a trade or if I wasn't involved in one, I'll still go back and review the tape, mark it up, go look at where I could have been. If I am involved, look at how I could have done it better. More so is my approach these days, to try to make sure that I look at where I could be bigger or where I should have cut earlier, and then go through tape if I'm exiting too late, trying to work out what I missed in the tape that I should have seen, that maybe give me a better entry or exit, or could have saved me some cash here or there. These days is more so reviewing the best trades of the day, the ones I missed, the ones I was in, and trying to work out how I could do them better, or.
Do you tend to manage or micromanage your edge, so to speak? So even with your day trading stuff or your short-term stuff, if you start to see your results coming off, do you like, how closely do you monitor that process? Because they could be coming off because of just pure statistics. We're on 60%, you can have a great run of offs. But if you, like, one, how do you manage that? And then two, if you do start to pick up that things are not quite performing as well as they have, how do you process that? And what's your if you do decide that it's you, what do you do about it to try and get back on track?
I try not to do it on a daily basis, because I find sometimes I'll just have a bad day, and then I'll try to find what went wrong, if it was my process or if it was something that I did. But sometimes I'll just be I had not slept well, and I'll kind of be off the ball, and I'll mistake stuff. So when I go back to a review, something like am I not taking the right setups, or am I losing edge in a certain setup? I'll use it on a weekly basis. So I do like a weekly review, go back, look at the trades that, look at how the profits, where were they, where were my best trades, and where were my losses. And if my losses are adding up in a certain trade, then I'll try to look back and work out and kind of reflect on if that trade, if this is something that's consistently happening, or if they're different setups and they're one-offs, and then try to get a better understanding. I think it's hard to do on a day-to-day basis, but at least on a weekly basis, I'll look at that and try to work out, if there's a changing market situation. A lot of stuff that, like, I've been picking up more so on the fly recently, just feeling as if, the market, like a lot of the specs recently just seem to more so outside of, the hype stocks, your weed and stuff, but just I had smaller spec stocks that were just starting to lose volume, and there's no interest. They're getting sold into, fading throughout the day. Like if they opened up on fresh bids, they'd just be sold down, and then I'll start reducing size on any of those overnight holds without having reviewed at the end of the week. Just kind of get an idea of where the market's at and how it's feeling, and then I'll either reduce size on how I approach trades. As soon as I start losing consistently, I'm reducing size, even if that's throughout the day. So I'll be thinking about that through the day. And that's something that I'll do during the day, not at the end of a week. So if I'm losing in the mornings and I'm trading a certain setup, or if I don't feel like I'm on the ball, I'll reduce size for the next trade, and then again for the next. If I'm seeing a continual decline in the quality of the trades I'm taking, I'll just keep reducing until it's insignificant, I guess.
That's a real a real skill that a lot of traders and a lot of failing traders don't have, because often the instinct to, especially newer traders, is they're losing and they've got to get it back. So it's a great skill and a real testament to you that you can go through that process where I'm not seeing, well, I'm cutting it back, not the next one. It's not the next one. So that's really good. And it probably goes. Sorry, you go.
I think Mike Katz said a really good. I've taken it. It's more of a structured approach to that, where he talks about losses and how you should size down. And he says you average out your daily win for the month, and then that's your lockout amount. I thought that was a really smart way to think about it in more of a structural sense. I'm not that structured, and when I see losses, I kind of just do it how I see fit. But in terms of structuring what's a lockout, and whenever you're on tilt and you're not doing it, I thought working out your average win for the month in terms of your average win for the day, and then using that as a cutoff. So you're only going to be out by one day. If you take that loss, you can make it back the next. I thought that was a smart way of doing it.
Yeah, it is. And we sort of do something similar. Sometimes something I suggest is look at your last 2 or 3 months and take your 10 biggest wins and average that. And like a losing day should never be as big as your 10 biggest wins. So maybe 75% of that is your sort of stop, and that way you're not blowing up significantly. But any of those sort of processes, I think, are awesome. Yeah. So what about physical and mental health? Like, is that something that personally you see as important to monitoring to keep it on top of your trading? Or
yeah, for sure. I think nowadays it's probably a little bit easier than it was when I first started. I probably started when I started. I was still scarred from March, and I'd taken a couple of crap trades during March, and I remember just waking up to limit down again, just thinking, oh my God, I'm long a bunch of stocks, and I think that scarred me to a certain extent. It helped me. It was very valuable in the sense now that my risk management is 10 times better was when it was in March, especially when it comes to overnight holds. But I think, when I first started, I guess it was a mix of excitement, like really wanting. I loved what I was doing, and I was excited to get to the screens in the morning. So at night, I'd kind of sit there in bed and just think about every trade and all, each each and everything that happened throughout the day and different stocks I was trading. I guess that probably kept me up a bit at night, but I don't think that was, I wouldn't call it stress as such. I guess it was a mix of stress, excitement, and all those kind of emotions. And dealing with them definitely plays a massive part in your trading, especially like getting to the morning. But I think with that, it was just sleeping, eating well throughout the day, drinking lots of water, exercising. One thing I probably didn't do enough, and I try to do as much now, is just go to the gym at night, try to sweat it out, or just take your mind off something other than trading, because it can be all encompassing. You just like think about trading every second of the day, and even on weekends you're checking your phone and seeing what's going on in the market. So I think trying to find a way to detach yourself from the market. I don't know what, like each person's different, going for a run or a surf, or just finding a way to do your best just to stop thinking about trading, especially after a big win or a big loss. I think what helped me was just trying to forget about it and just kind of approach it with a clear head. Because like I know heaps of traders like myself just don't want to be like we don't even want weekends to happen because you really enjoy what you're doing. So it can be draining, and I guess stressful is definitely something that, especially after in drawdowns and stuff, and when you're in those drawdown periods, it's no doubt it's very stressful. But I think just taking time out just to separate from it and try to keep that peace of mind.
So for newer, and this is probably aimed at newer traders, and again wrapping up that process and the hardware software thing, if you were to start over again, what would you put more emphasis on? What would you do differently? And what would absolutely bare basic sort of setup be as far as what tools you needed and that kind of process? What was the minimum you'd want, and where would you put your emphasis on if you were starting out?
Probably as you said, process. Trying to make sure that you're not just focusing on winning, because I think I focused a little bit too much on just making money rather than focusing on the process behind a trade. Well, that's what I was kind of referring to at the start, where I just want to be in a trade. Like if it was in play, I wasn't really focusing on the setup and in making sure the variables were right. I was just entering at a point where I thought it made sense. But going back and just focusing on process, taking away P&L, and just working out, because I think when you first start trading it, you have to kind of refine all your variables and focus on a certain trade so that you know intimately that setup. So like trying to reduce the amount of trades you take and just focus on one setup, know the variables for that trade, and then just measure that, because there's just so many different trades you can take. There's so many different things going on. Just really refining it down to a certain setup or trade, and then focusing on that, making sure you're ticking all your whatever the variables are for that trade for you, and just make sure you're ticking that, and taking away everything else. Not trying to do a scattergun approach to your trading where you're taking every other setup, because it's too hard to measure, and it's too hard to see if you're doing well, or to accurately get a gauge as to whether you progress if you're taking every other trade and not really honing in on a certain setup. So I'd probably focus on process and reduce my attention to a certain setup so that I can measure it more accurately.
From a hardware software point of view, what would your must-haves be?
I didn't
How many
start.
monitors did you have when you started?
Just two. So just one.
Probably enough, right?
Sorry?
And it was probably enough, right?
Yeah, it was fine. I didn't even have Spark for the first couple of months. I just used Viewpoint for executions and charting depth. You can definitely learn, like, it's not like you need Spark to learn tape reading. Like I think most of my basis of my tape reading came from when I was at work and I'd just be watching tape all the time. You don't have the histogram, which is awesome. And like, I don't know, when I try to get on Viewpoint now, I find it really hard because I don't have the setup, but I think you just become really comfortable with Spark. But when I used to have Viewpoint, I think I was still able to find certain edge or start to define an edge by just using Viewpoint, just the iris viewpoint that they give you with the standard brokerage. And then, so that would be the charting, the depth and the execution. 2 screens just so that you can have your tabs up and you can have fast execution while viewing the charts. You don't necessarily need the 2, but it definitely just helps with speed and your layout, so it's not too squeezed and you can get all the information on the screen. I think it helps.
Yeah. Well, look, we'll start to wrap it up. I've got 2 more questions, and hopefully we've covered everything that everyone's asked for. I think we've had a pretty good crack at it, but we haven't really been too trade specific. Just, I want you to talk me through a typical, and we've sort of talked about the entries. So, you're looking for stale offers, breakouts, and so on. Maybe talk me through a typical exit of one of those trades. What are you looking for?
Yeah, no worries.
Just to scalp, how you look at, are you scaling in? Are you scaling out? What are your signals for? Just pick one setup and talk me through a successful trade.
Yeah, no worries. So I guess a breakout trade is one that, especially like to break out to all-time highs, probably one of my favorite trades, or at least to like recent highs. So yeah, I'll always, pretty much as soon as if I'm in a conviction trade where I've got size on, as soon as I'm in the money, I'm starting to scale out, even if it's just the smallest amounts, because usually when I want to be in profit to know that I'm booking profit. So as it's going up, I'm taking it at each of the levels that make sense, especially when it's extended from VWAP throughout the day. I'll be taking profits at any of those points, but I'm also happy to rebuy them at lower points. So that's when I refer to in my reviews of I'll intraday trade one of my conviction trades that is also an overnighter. I'm trading that intraday in the sense that anything that's extended from VWAP, I'll sell into. I don't have to buy that back, especially if it keeps going, gets more extended. I'll be selling on the way up. But if it does pull back in, I'm happy to buy back that stock. So I'll be trying to create cash flow on the way up whilst trying to hold a core. That's one thing that I just cannot get right these days, or any day, is just holding a core, especially when I'm right. I mean, those exponential trades, I'm usually out halfway up the move, but something that I'm working on is just trying to hold that core, because it's like, those type pen recently, I had a really decent position that I cut way too early. So I'm usually looking for what I'd call exponential, but these days is never exponential, because, where you think exponential, I look at CPH, I thought it was exponential at 3 or 4 and went to 40. So yeah, just trying to find points where it makes sense to me, where I think it's extended, where there's new supply coming in, where it's pulling back. Just trying to manage the trade on an intraday sense, and if I'm swinging it overnight, then trying to look at his overall sense as well.
And the beauty of scaling out, if you're hitting with size, as your edge grows and your size grows, that the piece that you keep for overnight, if you're just keeping a little pass, a little core, that piece starts to become more significant.
Yeah.
And you're booking more profits along the way. So it's certainly one of the reasons why the process is so important, because once you get the process right, you can replicate it, and then that small size overnight actually becomes significant. So yeah, that's a really good approach, I think. So I'll end with this one. Just your goals for the next couple of years. Like, one, do you set goals, and are they monetary? Are they process? Are they lifestyle based? Yeah.
Yeah.
Where do you see yourself?
I've recently bought a house, so I'm taking a lot of my funds away to pay for that. So my focus for next year is going to be a lot more process driven intraday. I want to focus on familiarizing myself with more intraday setups, and not so much monetary. Next year, I kind of don't want to, focus on building any significant fortune or anything like that. I just want to become better at intraday trading. Pretty much, a lot of my want to become more familiar and be able to have the conviction intraday to hit with that size that I have the familiarity doing overnight trades with. So I want to be able to see those setups in real time intraday and then approach them in the same way that I would a conviction trade that I'm willing to hold for multiple days. So just working really hard on refining my intraday styles and then playbooking a couple of those setups so that I can replicate that success that I've had previously with those overnight trades intraday.
Awesome. All right, mate. Well, it's almost right on an hour. So, yeah, that's awesome. So I hope everyone got something from that. We haven't lost any participants, so we haven't bored anyone to hit the exit button yet. So look, yeah, I hope everyone got something from that. And gee, if we can do one of these a month and get the quality that we've got out of this one, it's it'll be fantastic. So thanks a heap, mate, for being our guinea.
Thanks for having me.
Once again.
Thanks
Everyone
guys. Thanks
for
for
joining in. See you all tomorrow.